Welcome back. You're tuned into CNBC-TV18. IT major TCS has kicked off Q4 earnings season. The company has reported a subdued set of Q4 earnings. My colleague Rima joins us now with the earnings fine print. Over to you.
Thanks so much for that. So the TCS's top line has degrown. The company's revenues are down 0.8% quarter on quarter in sequential terms, in constant currency terms, and down 1% in dollar revenue terms. So that's a bit disappointing to see the revenue of the company decline. It was expected considering the macro uncertainty and the fact that Q4 is a seasonally weak quarter, and the macro uncertainty only exacerbated the weak seasonality. So the top line for the company has fallen. The disappointment comes in from the margin front. EBIT margins for the company are down sequentially at 24.2%, and this is despite a decline in the BSNL revenue, which is a low margin deal, right? So typically when a low margin deal is contributing less to your top line, you would have hoped for some margin expansion, but that's not played out this time. Margins have fallen, especially look at the margins on a year-on-year basis. In Q4 of last year, EBIT margins were nearly 26%. The good part is the deal wins. The deal wins continue to remain very robust, and they've come in at $12.2 billion higher on a sequential basis by nearly about 20%. BFSI has done very well for the company, though some cracks, pressures are visible in sectors like consumer, which will be impacted by the entire on and off tariff uncertainty that we have right now. Attrition for the company is higher. 13 has become 13.3% on a sequential basis. So all in all, it's a subdued quarter, but that's what's happened. Q4 numbers assume less importance. The street is, clued in very closely to what FY26 holds, given the macro uncertainty. Are deals being put on hold? Are there any cancellations? Are they being ramped down? Are decisions, the discretionary spending, which the company saw early signs of revival in January, what has happened to discretionary spending? So that the macro environment right now, client behavior, corporate behavior assumes more importance. But to take stock of where the stock is right now and the numbers, we have with us Prakash Diwan and Sandeep Agarwal from Sobilo Investments joining in. Gentlemen, thank you very much for joining us on this holiday. Sandeep, you go first. What have you made of the Q4 numbers?
Good evening. Thanks for having the show. The numbers, as Rima mentioned, are quite subdued, to be honest, and even the margins, despite BSNL decline in revenues, the margins are still subdued and below expectation. And I am a little more worried on the attrition number. The attrition number has not picked up. It is at 13.3%, which also is a sign that demand is not going to be strong in near term. And while TCV looks good on a Q-over-Q basis, but on a year-over-year basis, it is down 8%. So, I believe that these numbers are not giving any hope of optimism for the future quarters. Obviously, able to guide more on the results, but the numbers which we have and the
Okay, got you on a bit of a scratchy line, Sandeep. We'll try and fix that. In the meanwhile, Prakash is also waiting by. Prakash, marry the numbers, what we've seen in terms of Q4 and the way the stock has gone into the earnings, because the stock fell on Wednesday and it's down more than 20% on a year-to-date basis. So the street has priced in a lot of pessimism.
So I think the numbers are not a surprise, to be very honest. There was expectation the metrics would probably turn out to be soft. And the constant currency,
Okay, Prakash, unfortunately can't hear you also clearly. Let me try my luck with Shushuvan, who joins us from Anand Rathi. How would the numbers compare with your expectations? Shushuvan, is my audio reaching you?
Yeah, I'm able to hear you.
Yes. Wanted to know your first take on the TCS's numbers. Go ahead.
Yeah, the numbers, I think the revenue, as you had mentioned, it's slightly subdued. I think the margins front, the expectation was the margins would have improved, but it's 24.2%, which is lower than what was expected from a street perspective with the ramp down of the BSNL revenues. I think the same thing even gets translated into the profits. The 19.1% profit margin also is lower than expected. It's almost a 4% lesser than what the street was expecting. As you also did mention about the TCV, the $12.2 billion looks good sequentially, but over a year-on-year basis, it's still a lower number. So that's something that is not very optimistic, right? So that's basically how I would sum up the results.
So Shushaman, in FY25, TCS's top line grew by 4.2%. And I think EBIT margins were closer to 24.335, 24.3, 24.4%. What are your FY26 expectations? And is there a risk, given the margin miss, of any EPS downgrades for TCS this time versus consensus expectations?
I think we'll just wait for the commentary, the way it pans out. I think that's very important today. After that, we'll be able to give a better view of the FY26 numbers, because I think it's important to understand what's the rationale for the margins declining the way they have. And I think post that, we can have a better view. But as
Will
of
you
now,
share yeah, go ahead.
Yeah. But as of now, I think we had built in somewhere around 5.5% increase in FY26 versus FY25. That's almost $31.5 billion for FY26 is what we had built in. And as far as the operating margins are concerned, we had built in a higher number of 25.6%, but with the results the way they are, because we thought 4Q will be better from a margin perspective. So I think that may need some trim down. So that's something which we'll have to build in.
What could explain the margin miss this time? What could explain the margin miss, Shushaman?
Margin miss, I guess, may have been basically the India exposure being 8.5% still continues to be high. In fact, the growth has primarily come from India and the emerging markets. I think that may be one of the reasons why the margins may have been lower than expected. At least that is what I can think of. But I guess we'll get a better view once we enter into the con call. Yeah.
Prakash, you were telling us about the numbers and the way the stock has gone into its earnings, because a lot of the pessimism is already priced in.
That's right, Rima. So I don't think the street was expecting anything far better. And, the margin, the explanation for the margin reduction also is that the BSNL impact is waning already. We started seeing that last quarter. It's actually going to almost diminish. And most of the work that has come in is absolutely low margin. So there is nothing very, spectacular in terms of expectation. The stock has already reacted to this. My sense is it's a commentary that everybody is going to be very keen on figuring out from here on for the stock. That's more important rather than what's happened in the last quarter. So let's see, we'll have to wait for that. Though TCS doesn't spell it out very clearly, but you'll probably have to read between the lines, get an idea of what anticipation they have of the environment. That's going to be important for the entire sector as a whole, right?
So, Prakash, top 3 questions for the TCS management. We're just awaiting the press conference.
So I think the first question is going to be whether, it's a client reaction to all this confusion that's happening, the mess that's happening. Have they actually started seeing articulation of, slowdown or people taking a pause? And if yes, what impact? And the second is whether they are in a position to take advantage of some of the changes that are happening in the global trade scenario and some of the new geographies that they could probably go to. Is there some silver lining that they could probably look at? Maybe not immediately, but after 2 quarters. That is going to be very critical. And of course, they'll have some explanation for attrition and the kind of bench that they maintain currently, because that's also something which is not kind of figuring out in terms of when you compare it with Infosys and some of the other players who are probably more aggressive at this point in time. So where can the aggression come from is what the management could probably be asked.
Gentlemen, thank you very much for joining in. We're just going to, await the top management of TCS address in terms of what lies ahead for FY26. So the street is a bit worried. We've seen IT correct going into the numbers. Let's see what the management has to say. With that, guys, it's back to you in the studio.
All right, thank you, Rima, for that, and thank you to all our guests. With that, it's a wrap on this edition of our special bulletin. More news and updates continue on CNBC TV 18. Stay tuned.